The UK government will add 25% on top of every pound you save into one specific account. Save £4,000 and they hand you £1,000 for free every single year until you're 50, and yet the vast majority of UK adults under 40 have either never heard of this account or have no idea how it works. It's called a lifetime ISA, and by the end of this video you'll know exactly what it is, whether you qualify, how to open one, and the one trap that catches thousands of people out every year. A lifetime ISA, usually called a LISA, is a type of ISA account available to UK adults aged between 18 and 39. You can save up to £4,000 into it every tax year, and the government tops that up with a 25% bonus paid directly into your account. That's up to £1,000 of free money every year. The LISA sits inside your overall £20,000 annual ISA allowance, so if you put £4,000 into a LISA, you have £16,000 left to use in other ISA types that tax a year. Now here's where it gets slightly more specific. A lifetime ISA can only be used for one of two things: buying your first home or funding your retirement. You cannot access the money for anything else without paying a penalty, and we'll cover exactly what that penalty is in a moment because it's important. There are two types of LISA: a cash LISA, which works like a savings account and pays interest, and a stocks and shares LISA, which invests your money in the market for potentially higher long-term growth. For anyone using a LISA for retirement or a first home that's more than 5 years away, the stocks and shares version is generally considered the better choice. Let's make the bonus concrete. You open a LISA and contribute £4,000 before the end of the tax year in April. The government adds 25%, that's £1,000, directly into your account. Your balance is now £5,000. You didn't earn that extra £1,000. You didn't invest it. The government simply handed it to you for saving. Do that every year from age 18 to 50 and you could receive up to £33,000 in government bonuses alone over your lifetime, before any investment growth at all. The bonus is paid monthly by HMRC directly into your LISA, so you don't have to wait until the end of the tax year to see it. It appears relatively quickly after each contribution. One thing to be clear about: the 25% bonus is calculated on your contributions only, not on any growth or interest already in the account, so the maximum bonus per year is always £1,000, based on the maximum £4,000 contribution. If you're saving to buy your first home in the UK, a LISA can be a genuinely powerful tool. You can use your LISA to buy a property worth up to £450,000. The home must be purchased with a mortgage. Cash buyers cannot use a LISA for a property purchase. And you must have held the LISA open for at least 12 months before using it. The bonus is paid directly to your conveyancer as part of the purchase process. You don't receive it as cash, but the effect is the same. It reduces how much of your own money you need to complete the purchase. To be eligible, you must be a first-time buyer. If you're buying with someone else, both of you can have your own LISA and both bonuses can be used on the same property, as long as both of you are first-time buyers. The £450,000 property price cap is worth noting carefully. In some parts of the UK, particularly London and the South East, that limit can be restrictive. If you're planning to buy in a higher priced area, make sure you check current property prices in your target location before committing to a LISA as your primary savings vehicle. The second use for a LISA is retirement. You can access your LISA penalty-free from age 60. On the surface, this sounds attractive: a 25% government bonus on top of your retirement savings, with tax-free growth inside the ISA wrapper. But before you redirect money away from your workplace pension into a LISA, there's a critical comparison to understand. Your workplace pension comes with employer contributions. By law, your employer must contribute at least 3% of your qualifying earnings on top of your own contributions. That is also free money, and in most cases is more valuable than the LISA bonus, particularly if your employer matches contributions beyond the legal minimum. The general rule of thumb is this: always maximise your workplace pension contributions first, at least to the point where you're getting the full employer match. Then consider a LISA as an additional retirement savings vehicle on top of that, not instead of it. We cover workplace pensions in full detail in a separate video. This is the part of the LISA that catches people out, and it's important enough that we're going to be very specific about it. If you withdraw money from a LISA for any reason other than buying your first home or retiring after age 60, you will pay a 25% withdrawal penalty on the amount you take out. Now, that sounds like you'd simply lose the government bonus, but the maths is slightly more painful than that. Here's why. If you put in £4,000 and receive a £1,000 bonus, your balance is £5,000. If you then withdraw that £5,000, the 25% penalty is calculated on the full £5,000, not just the £1,000 bonus. That means the penalty is £1,250. You put in £4,000, you get back £3,750. You've lost £250 of your own money. This is why the LISA is only appropriate if you are genuinely committed to using it for a first home purchase or retirement. It is not a flexible savings account. If there's a chance you'll need the money for something else, a standard cash ISA or easy access savings account is a safer choice. The penalty was temporarily reduced to 20% during the pandemic, but it returned to 25% in April 2021 and has remained there since. In the UK, the main platforms offering a lifetime ISA include Moneybox, AJ Bell, Hargreaves Lansdown and Nutmeg. Each has slightly different fees and fund options. Moneybox is the most popular choice for beginners. It's app-based, simple to use, and offers both cash and stocks and shares options. For a more experienced investor who wants more control over fund selection, AJ Bell or Hargreaves Lansdown offer broader choices. As always, check the current fees before opening any account, as these can change. We'll cover a full comparison of UK investing platforms in a dedicated video. So to bring it all together, a lifetime ISA gives you a 25% government bonus on up to £4,000 per year. That's up to £1,000 of free money annually. It can be used to buy your first home or to fund your retirement from age 60, but it comes with a painful withdrawal penalty if you access it for anything else. So only open one if you're clear on how you plan to use it. For most UK adults under 40 who are saving for a first home or building long-term wealth alongside a workplace pension, the LISA is one of the best accounts available. The government bonus alone makes it hard to ignore. If this video helped you understand the lifetime ISA for the first time, subscribing takes 2 seconds and means you won't miss a video. We post twice a week on making your money work harder in the UK, and next up we're comparing the cash ISA and the stocks and shares ISA so you know exactly which one is right for your situation.